All right, welcome to another Learn, Grow, Invest video. Today we're going to be doing the stock analysis and review for iCreate Limited that is listed on the junior market on the Jamaica Stock Exchange. We're going to look at the annual report for 2021 and go through the Q1 financials that ended March 31st, 2022. Now, iCreate is one of those companies that, was listed a few years back, has been through some challenges as a company. So we're going to see the progress of the company over the last few years. We're going to talk about some of the changes that we've seen over the last few months, some of the key announcements that have been made about the company, and see if we can just analyze the numbers that we're seeing. This is really meant to be a set format. So we go through an overview of the company. We look at the financials, starting with the annual report and then Q1. We're going to talk about the price history for a little bit. This company has not been known to pay dividends. Let me actually do a quick check. I don't believe there's been any dividends paid, so there are no dividend announcements to make. When I talk about some of the things that we expect to come on stream later on this year, and that's pretty much the review. So, if you have any questions, please, feel free to post them in the chat or in the comments if you're watching on the replay. So let us jump right into it. We thank you, Lord, for this day. We thank you for the ability to learn, grow, and invest. We pray that you'll bless this community give us, knowledge, wisdom, and insight in Jesus' name. Amen. All right, so let me share my screen. Let us see. So let's actually just start with, let's actually go to the company website. That's a good place to start. All right, so, iCreate Institute, it says here, let me actually zoom in just a little bit. All right, so it says it's listed on the Jamaica Stock Exchange junior market. So it is a creative institute developed with the aim of filling the gap in skills training and development of creatives in Jamaica and the wider Caribbean. As an important part of the creative ecosystem, we provide students with a wide range of career opportunities in the creative economy while being a key partner of the advertising industry, film production companies, animation and gaming companies, and creative outsourcing initiatives. And if you checked out our interview with Tyrone, he would have mentioned, potentially an opportunity to partner with esports gaming. So, animation and gaming companies being mentioned here is interesting to see. And this company has actually gone through somewhat of a transition. Well, the word that Tyrone used was pivot from their core focus here to take on some initiatives that were meant to help, bolster cash flow, etc. So we're going to talk about those a little bit. Tyrone did say to us in the interview that we had with him that their core priority is still education, and they're going to be, focusing on that as much as possible. So, you should definitely watch that interview if you haven't checked it out as yet, see what he's saying, hear from him personally. And, if it is that you're interested in this company, as we said, speak to a licensed financial advisor before you make any investment decision. All right. So that is the company. So let's see if we can get any other information here. So there's a Digital Marketing Institute. These are the board of directors here. That's the Academic Advisory Council. This is the leadership team. Okay, so it's speaking about reasons to enroll within the institute. Let's see here. On the business side, there's a info kit here. It says download. I'm not able to download anything. I think I need to maybe check to see if that link is broken. All right, it's actually not downloading anything. I might need to ask Tyrone about that. Let's see the investors page. So this investors page, typically you'll see the same information that you see on the Jamaica Stock Exchange website, which is right here. But sometimes I find that you may see some announcements here a little bit quicker than the Jamaica Stock Exchange. So I typically just bookmark these pages if it's a company that's listed, just in case there's anything that comes in that might be a little bit faster than the stock exchange. So everything here we're going to look at, talk about a little bit. So two main things that have happened recently. Let's click on this one that says more. So there was a release that came out about, iCreate acquiring majority stake in Ascent and Development. And again, if you watched the interview with Tyrone, he spoke about this being simply a move for them to acquire cash. So they've acquired a stake in this development. They're hoping to close the transaction by the end of this year and realize the profits from that transaction. So it's saying here, as a part of their 2-to-1 corporate investment strategy, where they're hoping to see $2 million in revenues and $1 million in profits by the end of the financial year. That's why they would have undertaken this acquisition. So let's see if we can learn a little bit more about it here. Zoom in a little bit. So it says here, the land has been purchased, all professionals hired, and drawings are in the process of being submitted to the Cent and Municipal Corporation for expected approval. The project is under 10 units. I believe Tyrone confirmed it's 8, and therefore NEPA submission will not be needed. It is proposed that 2 luxury bedroom condos with 2 luxury 3 bedrooms. So 2 bedroom, 3 bedroom on the upper floor. All apartments will have large balconies with a commanding view of the Caribbean Sea. All right, that's pretty much it. And this was April 20th. So that was about a month ahead of this recording. So that's one of the news that we saw recently. Let's click see all. There was another acquisition. Let's actually go to the Jamaica Stock Exchange website for that. Latest news. All the links for everything that I'm showing here will be placed in the description below, but I think you guys know where to find these things since we go through them every week. All right, so the next one was about acquiring a majority stake in e-commerce company Get Paid Limited. Again, alluding to the interview with Tyrone, he said that the details of the acquisition were not able to be shared before. Mention is that he sees it as a good opportunity to partner with a business that can help them in terms of their plan for growth. So it says we are enabling the expansion of digital payments and the digital communication space, and being a part of the iCreate team enables us to achieve this vision at a much faster pace. I'm wondering if I read that wrong or the sentence is just a little disjointed. We're comfortable with the integration as a part of iCreate so far, and we're very pleased with the outlook and synergies between iCreate and Get Paid. So we're hoping to hear a little bit more about this acquisition. This really didn't tell us much. The anticipation here is that will have an impact on the revenues at some point during this financial year as a part of their 2-to-1 strategy that was mentioned. When we get to the Q1 financials, we'll see that the revenues for the first quarter were about 46 million, but their 2-to-1 strategy in terms of $2 million would be about 300 million. So, I mean, there's still a ways to go where that is concerned. When we get to the financials, we'll talk about that some more. All right, so that's the company overview. Really started as an education company, taken the strategy of taking on other projects for boosting cash flow while still focusing on their core business and hoping to expand that further. So let's look at the annual report. Let's see where I have that there. Sorry about that. I have a couple of reports open. So this is annual report for 2021. So what I've actually done here, let me actually use Excel instead. So this is, I would have brought in the financials from 2018 all the way to 2021. So I've done this for the balance sheet and the income statement, didn't do it for the cash flow statement. So we'll look at that in the physical report. So, what we're seeing here in terms of, let's just focus on summary, right? So in terms of assets, and how they've grown over time, started at around 14 million in 2018, and most recently 75 million at the end of 2021. In terms of key drivers for that value, we're seeing it's really cash, right? So cash based on, I guess that would have been, they would have gotten about 50 million from the equity, I believe, last year. That might account for some of this cash here. That was 50 million. We'll look at that reference in a second. Intangible assets would have been, 7 million coming in from the year before. Property, plant, and equipment, they mentioned previously that they would have, released some of these throughout the pandemic. So property, plant, and equipment, maybe things have been sold, maybe properties or items have been sold over the last 2 years. So that's why we're seeing that scale down. I believe that's what we would be seeing there. Due from related party, the annual statement would be able to speak to what these are, but we're not going to get into that. Main driver in terms of increase in profit would be cash and cash balances, right? So that was one of the things that they would have struggled with previously, as you see, for the 3 years before 2021. So that's what we're seeing an improvement in right there. In terms of issued share capital, started in 2018 with 500,000. It's up to 124 million right now. In terms of accumulated deficits, though, that has been growing as well. Definitely want to look at the annual report to give some more context to this. So let me make a note of that. Let's look at that some more. In terms of liabilities, that would have been about 25 million coming in to the end of 2020, rose by about 10% for 2021 in terms of non-current liabilities. So current liabilities now, trade and other payables, that's one of them that we want to watch here for this company in terms of that number. Let me highlight that there. In terms of lease liability, I imagine that would be, again, speaking further to what they would have done in terms of strategy. So that cost, I'm assuming, is no longer there. Current portion of loans payable, 2.9 million. Due to related parties, again, we can see those details in the notes. Bank overdraft, from 12 million in 2019 to 146,000. Good to see something like that. And in terms of customer deposits, that hasn't been on the books for the last 2 years, coming from 1 million in 2018, right? So in terms of current liabilities, so one of the things we look for is whether or not the company is able to meet their current liabilities with current assets. So this is 37 million. And current assets is 61 million. So they're able to meet their short-term obligations. That's one of the things that they would have spoken about, like AGMs and other settings, being able to cover these short-term debts. In terms of some of the key ratios that we look at for the balance sheet, we just spoke about the current ratio. So that would have grown over the past 4 years. This is definitely something that you want to see above 1. So that's good to see. And cash ratio has been growing as well. That's very good to see. Debt ratio currently stands at 0.87, and debt to equity is currently 7, and the ratio is pretty much what it says, right? Debt to equity is measuring debt in relation to equity, and debt ratio, I believe, is looking at, this is debt in relation to, sometimes I don't remember these, debt in relation to total assets, right? So that's what that is. In terms of working capital, It's finally positive for the end of 2021. It would have been negative in the previous years. That's number that you're seeing here. So let's look at the profit and loss statement now. Revenues would have gone to a peak of 58 million in 2020, but would have seen a drop in 2021. I assume this would be based on the pandemic and some of the other factors, lockdowns, etc. Customers may be scaling back, so revenues would have seen a drop there. In terms of their Q1 for 2022, let's quickly look at how the revenue compares. I'm gonna do a quick scroll here, guys, forgive me. So revenues would be 46 million here. All right, so 46 million here compared to, all right, where am I? So when you have multiple, oh, I'm in Excel. So 46 million as opposed to 21. So 46 million for Q1 2022 as opposed to 32 million for the entire year. So there's definitely growth where that is concerned coming in from the previous year. Direct costs is lower here. That's good to see. And gross profit would be 24 million. Other income, would have to read the notes to see what that other income is. And expenses for the last 3 years in terms of admin and general expenses are more or less the same. All right. Stephen is asking what's the revenue. So the revenue here, speaking to the revenue in comparison from the end of 2021 to the first quarter. So the revenue is here, Stephen, this line here. Let me actually highlight it in green. Okay, that's the revenue. So I was saying that in terms of comparison with their Q1, which was 46 million in revenue, for their entire year in 2021, they only did 32 million. Right, so there's definitely an improvement there, right? Next, depreciation, that's standard. So they would have realized a loss in terms of operating loss of 22 million for 2021. In terms of loss for the year, 32 million, right? So coming into this year, they would have realized a loss for pretty much 4 straight years. Again, I think that would have improved coming into this year. So we're seeing finally positive income. So instead of net loss, it's net income of 10 million. So that's definitely some growth there. We'll get to the percentages in a minute now. I mean, I'm not personally whenever a company is coming out of a negative profit or any number that's negative, you're going to see a very impressive number of growth, right? This is something that personally, I think you should take within context. Now, I believe the number is 450% growth. In this case, I like to just look at what the profit is and not the 450%, right? So let's just put it that way. And we did some ratios here on the income statement. Again, these would have been mostly negative coming into this year. So we want to look to see how these shape up for Q1, which should set the stage for the rest of the year. All right. So let's look at their cash flow statement for 2021. Let's start there. We're not going to look at the cash flow statement for 2019, 2018, because I mean, I think that's far removed from where we are now. So as we mentioned before, there would have been a net loss for last year. Let me actually let me see if I can just expand this here so you can see it. I think you can see it a little better now. All right, perfect. So net loss for the year, but let's see if there's anything major that we want to look at and compare it to the current quarter. So net loss for the year is there. There's expected credit loss provision of 8.5 million, interest expense 8.7 million, So in terms of net cash, in terms of operating activities, that's minus 23 million. That is expected, as we said before. In terms of investing activities, so this would be through acquisition or sale of property, plant, and equipment, and acquisition of intangible assets. There was one expense of 223,000. So net cash in terms of investing activities, 223,000. In terms of financing activities now, we're seeing paid in capital of 68 million. All right, that's loan payment of 4.2 million. And so definitely financing activities would have led to positive cash here. So that's why I believe net cash, closing cash balance here is 46 million. So that's why you're seeing that mainly attributed to this here, right? Okay. All right, let's look at Q1. So this is their Q1 for 2022. So we're gonna look at their highlights. I think that would be good to cover. All right, yes, so this is what I was saying before, right? 451% increase. That's based on just Q1 2021. Now, as I said, in terms of their entire year, they would have done better in Q1 than their entire, they would have done better in Q1 2022 than their entire 2021. So that's what you're seeing here. Personally, you just want to take these numbers into context based on what they're coming out of. Now, it is good to note, it is great to note, but you just want to, I believe, take these numbers with a sober view because it may set the wrong expectation for future growth. Hopefully that makes sense. So the company recorded revenue of 46.4 million for the 3 months ended March 31st, 2022. And as we mentioned, those increased before, and this is 41.3% more than all revenues made for the 2021 financial year. We mentioned that previously. Revenue growth, don't think you guys can see this, so let me zoom in. Let me open that in the desktop app so I can zoom in. Sorry about that, guys. I should have known better here. Okay. You should be able to see that now. So revenue growth is attributable to the various initiatives announced by the company at its recent AGM. Now, there was an article released by David Rose which spoke about the highlights of the AGM. You want to check that out so that you can get the context of everything that was discussed there. So we mentioned the 2-to-1 financial strategy, which would have fed into their acquisitions of Get Paid and the Scent and Development. And it says here, their core business, the Institute, is now realizing strong growth in revenues due to the shift from business to consumer to business to business. So this was something that was mentioned at their AGM as well. The business to consumer model is not likely to be as profitable as the business to business, right? Working with corporate clients. So corporate clients may now require, credit terms. So you have to be sure that cash flow is strong to be able to keep up with expenses. But you're likely to realize greater profits using that model, right? So the company currently has now 3 major long-term corporate training partnerships. I don't believe we know what these are. Hopefully we'll get some more information on that at a later date. So they've trained their highest number in professionals in digital skills, and our receivable will trend down significantly for Q2 when payments from our corporate clients begin to flow in. So that's something we can look out for in the next report. The company made gross profit of 25.3 million, an increase of 270%. As I said, when you see big numbers, just sober view based on what last year was, right? And in terms of net profit of 10.1 million and an increase of 428.7% compared to Q1 2021. All right, so let's see what they're saying here. Main focus at the beginning of the pandemic was to ensure that they survive the pandemic. That's reasonable. This resulted in us reducing expenses and making necessary adjustments to our business model. So would have seen some of the reduction in terms of property, plant, and equipment in terms of their assets. And I believe, some of that would have been just to manage costs and maybe, getting some cash in, etc. So as they exit the pandemic, the company has implemented several initiatives to pivot and grow, and we're pleased about the results so far. This, as I said, lends itself to what would have said the Get Paid acquisition and ascent and development. So let's see what they're saying here. Okay, we spoke about that already. Let's go to, let's see if this is able to help us here. So they're saying expenses to revenue ratio is 76.33%. Margin of safety, the break-even safety margin represents the gap between actual revenue level and the break-even point. They have a margin of safety of 20 million. And let's see what this is saying here. So revenue is this, total costs would be this here. Break-even point would be right here. And okay, so they're pretty much showing you the breakdown of how they're able to calculate the margin of safety, and showing that there's some separation in terms of revenue, in terms of break-even costs, etc. Right? That's definitely helpful to see. In terms of margins now, gross profit, operating profit, and net profit after tax, they're showing the trend coming from previous years. So from Q4 2017 to Q4 2021, I would have seen those numbers in the previous Excel that we looked at. Gross profit in terms of relationship to revenue. This is between Q1 2022 and Q1 2021. Earnings after tax, we're seeing that trend again in terms of, let's see here. Okay, this year versus last year. Okay, this would be a breakdown of the expenses that we looked at already. Let's look at the balance sheet. So I remember the total assets was 75 million the previous year. I remember that figure. So assets would have been reduced here. I'm trying to see where it would have come from. I think the cash and equivalents would have been reduced. Let's look at that. So cash here and bank balances was 47 million here, and cash and equivalents is 1.5 million here. So they've used their cash, right? Other current assets, accounts receivable is 14 million. There was no, well, trade receivables was 17 million there, and it's 14 million here. So that would have doubled from last year to the end of the first quarter. But they did say that they're expecting to see that money coming for Q2. Fixed assets, let's see, short-term debt, accounts payable. The retained earnings is still negative here, 112 million. Is that a reduction? 112 million from 122 million. So that's going down by 10 because 10 would have been their net profit. That's what you're seeing there. Let's look at revenue. Let me zoom in a bit here. Let's just focus on Q1. All right, so revenue 46 million. As I said, that's growth from what they would have seen last year. There is admin and general expense of 13 million. Let's see how that compares. Admin and general. So this was 48 million. So if it's 13 million per quarter here, 26.52. So that's going to be about 10% higher for this year based on what the quarter is saying here. And there's an earning per share of 5 cents based on the fact that they're able to see a profit here. So that number is not negative anymore. Coming into the previous years, the EPS would have been negative. Okay. So we're seeing some growth there. Let's look at how they're managing cash. All right, so what we're doing here is just looking for anything that stands out to us. Cash flow from operating activities, that's 23,623,000. Cash flow from investing activities is 13 million here. So there would have been a change in investments or non-current assets of 13 million that wasn't there previously. And in terms of change in other non-current liability, 6.4 million, change in short-term debt, 1.4 million. So in terms of cash and cash equivalents, closing balance 1.5 million, and we see that on the balance sheet. So they've utilized cash that they had coming into this year. So we have to now see how this cash is maintained throughout the remaining quarters. They did say that they're planning to do a rights issue within the next 60 days. Tyrone said that. So, I guess that's where additional cash would come from. All right, so let's move on. Those are the financial reports. Let's look at how the price has been trending. Let me refresh this page to ensure that it is current. All right, so year to date, the company would have started the year at 87 cents, and last trading day would have traded at $4.09. So that's a growth of 426% year to date. In terms of quarter to date, that's 381%. Week to date, up 20%, and month to date, 31.83%. All right, there was 197 million units outstanding. This number is going to increase after the rights issue that is upcoming. In terms of performance, we would have gone through that already, so no need to share anything there. We went through the main news, so I don't think we need to speak about that right now. We would have seen coming into, so from about this point, right? Let's look at this date as April 11th. Right? We see here when the first announcement was made was April 19th, right? So about a week before the announcement, pretty much we started to see increased volumes, and that has been, kind of steady over the last month or so. Volumes maybe averaging about 500,000. Guessing based on some of these highs of 2.5, low of 319, that would be the lowest one over the last month or so. So it's been trading much better in terms of volumes over the last year. Definitely not seeing much there, but since the last month or so, you're seeing increased volumes. We have news like the acquisitions that have come out, the annual report that has come out, and the Q1 report. Those are actually released on the same day, I believe. So would have seen investors respond to that. And so I believe since this week, we would have seen the news of the rights issue. That would have seen since then an increase in price. Not sure if we can attribute it to it, but that's cause for speculation, right? So let's see what else we want to look at here. So let's talk about what we know, right? So we've gone through the annual report, Q1 report, spoken about the acquisitions that are upcoming. We know that there is an EGM coming at the end of the month to confirm some of the resolutions that were released. Let me actually share that document here, because it was not mentioned in this video, but it is something that, again, I'm going to just refer you to the video that I had the interview with Tyrone. He spoke about it there. So there's a notice of extraordinary general meeting, and there are some resolutions that they're hoping to confirm. So the first one, approving the conversion of loan to equity. That's with Equity Capital Limited. So there would have been a loan received of $50.5 million, and in exchange you'll have given shares at a discount of about 26%, the price as at December 4th, 2021. That's the first one. Next one, approving conversion of loan to equity for King Tire Holdings Limited. That would have been a loan of $18 million at a discount of 26%, same date of December 4th. And let's see what the next one is. Did I miss the next one? They're hoping to approve the increase of issued share capital. That's another one as well. And I think the final one is authorizing the creation and issuance of 100,000 Class A redeemable preference shares. So those are the resolutions that they're hoping to confirm. Let's see the dates here. Friday, May 27th at 2 p.m. So that's something that if you're a shareholder, you'll be able to go and participate in that. So we have that, that's upcoming. There's also the, based on where they are in terms of their revenue for the year. Now that 2-to-1 strategy that we spoke about before, they have a above $300 million target, and their first quarter revenue was $46 million. So there's definitely a gap there. When we asked Tyrone about it, he said that he believes the target of $2 million US is conservative. Now we expect the acquisitions to be added to that revenue, which may give that a boost. But again, we just need to see what Q2 looks like. He did say that he would join us again for Q2 to give us some more context into those numbers. So we can look forward to that. We're hoping to get more details about Get Paid and their partnership. And we will, I guess, be seeing or hearing something about the development of those real estate units. So that's really what's expected for the rest of the year for them. We do want to see how they plan to use the money from the rights issue that is upcoming. And yeah, so it's just really to look to see how the performance goes for the rest of the year. If you're interested in the company, you want to speak to your licensed financial advisor, see if this company fits what you're looking for in an investment. I think we've gone through the statements and given you, if not enough information for you to be able to determine whether or not this company is something that you'd be interested in. So yeah, let me know if you have any questions. Thanks guys for staying the whole video, because we did 2 videos in one here. If you've been here and you found value in this video, please remember to give it a like. It really does a lot for our channel. We're hoping, so there are a couple of results that would have come out while I'm shooting this video. That is FESCO and that's CPJ. So I'm gonna see if I can get those reviews in between the next week or so. And we have our weekly stock market review on Friday, where we talk about some of the highlights of the week. So we'll take a peek at the FESCO results in that one. So, thank you guys for being here. Thank you for, posting your questions to Tyrone earlier. Again, we're going to split these 2 videos because we've been live for 30 minutes now. That's really long. So we're going to split it into 2 videos. So, if you've seen one another, we'll put the link there. And so, yeah, thank you guys so much. I look forward to seeing you in the next video.